Good morning, everyone. Mike and Corey here. It is another rough day. After yesterday's sell off, I wish I could say the markets were in the green and rebounding and buyers jumped in, but that has not happened yet. With one of the primary reasons is that China is retaliating. So we will talk. Corey's going to actually hit on tariffs and earnings at the end. Going to show you the ugly news as far as the S&P 500. I'm going to reassure you a little bit with the S&P 500 for the last 55 years to show you kind of where this fits within that. And then we'll just do a couple other quick updates as far as financial news like jobs reports, rate cuts, things like that. As we get started today on this Friday, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So there may be people tuning in today watching this because they're like, what is the market doing? I know Steve put out a special update yesterday. The market sold off on the tariff news and it's selling off. When I say selling off, it's down 4%. But 4% or 4.5% is a lot. So let me share my screen, and sometimes it's just better to embrace the numbers and see what they are. But this is a graph of the S&P 500, a one-year graph. And you can see that 1 year ago at this point, we were about 5,200. So that shows in 1 year, we are basically exactly where we were. Of course, it's real painful because we were up over 6,000. Only 6 weeks ago, we were at an all-time high. 6 weeks ago. And wow, what a 6 weeks it has been. So when I see these numbers, I mean, obviously this is concerning to me. And I kind of put out a thing last Saturday to talk about, what do I do when I see this? One of the things that I try to do is just look back and say, let's look at a 55-year chart of the S&P 500. And this one shows crisis and events. And I looked at this updated one, and now there's a new crisis and event. Trump signs executive order to implement tariffs. That it's officially fallen into the same level as all of these other crises that have happened. Now, in the big scheme of things, when you look at the blip in the upper right, you can see, yes, it's dropped, and this was as of yesterday, so it dropped a little further today. But has it dropped to a COVID? And if I go back here to a COVID, that was a 34% drop there. And then back in the financial crisis, that was more of a 50% drop. So right now, let's just look at what the numbers are. The S&P 500 on the year. So year to date is down 11.5%. 11.5 isn't 34, but 11.5 certainly is a lot more than -5. So concerning. What do we do at Ankerstar Wealth? Well, we invest in best of breed companies. They tend to go up the most when the market starts to recover, which it will at some point. They will go up the most. The Apples and Amazons and Googles and Nvidias of the world. But also at the same time, we have to de-risk certain points as well as we make our model updates and quarterly updates, monthly updates. We're going to tweak these models to take all the latest news in effect. When this year started, you heard pretty much everyone saying we're not going to have a recession. The Fed may cut rates once or twice. Inflation will get down to 2%. I think everybody's throwing those out the window now. I've seen things that come out as high as saying that I think JP Morgan came out today and said there's a 60% chance we're going to go into a recession. So we might as well just embrace it and realize it and adjust accordingly. It's not like we can change it right here. We can't change the actual decision. All we can change is our investments based on that. I like to be positive, so I am going to bring up some positive news. It's kind of totally glossed over today, but the payrolls came out, 228,000 jobs in March created. Unemployment rate went up to 4.2%. but that really was just because the participation rate of labor increased as well. So more jobs were created than expected. I could scroll through and get the details. They had expected 140,000, but there was actually 228,000. So this is good news. This is good news. Another thing that I saw, and this is, like as we are reacting to tariffs in this situation, the Fed is going to react as well. And this is the best way. The Fed's very quiet about what they do. They'll have these public announcements, but then you don't hear anything. So what you do is you look at what the traders are doing. Where originally they thought maybe 2 rate cuts this year, now we're hearing 4 rate cuts. And if you are a person looking to buy a house or refinance your house, this is good news. I mean, overall, the market's down. That's not good news. But when rates come down, that certainly helps purchasing houses. So, anyways, those are some of the positives of this. I know it's a negative time and a rough week, but I want to, have a little bit of lightness here too. Give a quick update on our stock bracket picking. I'm going to bring that up real quick, and you can see, and this was as of yesterday, we have our final 4. United Health, who nobody in our group picked, advanced over Coca-Cola. And actually, United was up 3.3% yesterday. Wow. So they did really good. In the bottom bracket, MasterCard knocked off Home Depot, but it was ugly. MasterCard was down 3%. Home Depot was down 4%. So Cindy and Jaden, they have a final 4 candidate here. Over on this side, we had the retailer battle of Costco versus Walmart. Costco was up just a tiny bit, 0.2%, but Walmart was down, so Costco advanced. So Cindy, Kelly, and Joel have Costco. And then in our tech battle, this is where it got really ugly. Number 1 seed Amazon down 9% yesterday, went off against Salesforce. Salesforce advanced even though it was down 6%. We've had them. So here's where we are with the final 4, and those will play next week. Cindy has 2 points. She has 2 in the final 4. Kelly, Joel, Steve, Jaden all have 1, and the rest of you, like myself, like Corey, all eliminated. So anyways, we got the basketball March Madness. We got the stock March Madness. I'm hoping next week we hear green. I hope it's Salesforce, up 5%, MasterCard up 10%, whatever, and we start to see some green numbers. So anyways, over to tariffs in the economy. Take it away, Corey.
All right. So yesterday, to reiterate what Mike shared, of the 11,406 trading days since 1980, only 29 had a larger decline than yesterday. So we all get that badge of honor. We all survived it and lived.
Hey, Corey, I hate to see my birthday listed out like that in the red.
Well,
but I don't want
birthday too. It was my mom's birthday.
I don't want today to break the record either, though.
Well, hopefully today I'm not going to look, but I don't think it's very good. But hopefully we don't. Yeah, hopefully we have more than 29 worse days out than today, whatever we get. So I just wanted to hit on what dynamics are playing out right now. Investors, if you go tariff by tariff on that list, which 1 minute they're non-negotiable, another minute they're negotiable or ready to be talked about with other countries. So who knows? That's anyone's best guess. But investors are trying to figure out how long these tariffs will be in place. If they are in place, as were released on Liberation Day, it is clear that earnings will be falling for the S&P 500, or at the very best case, potentially being flat on the year. And there was quite a bit of earnings growth priced into the market. If you actually kind of do the math, investors are still optimistic that these tariffs will be removed or reduced significantly from their current state. In the event that they are not removed or reduced, that is not priced in right now. So some of this softness we're seeing doesn't have the full effect of the tariffs priced in. I don't know that it, and then you really try to extrapolate out the full effect of the tariffs on some of these companies. I mean, there's entire industries that would struggle to even remain profitable, honestly, through the worst of this. So it's a very interesting time. But as Mike said, when you're going through a scenario like this, there's two things I think about. One is the quality of the holdings. So you go name by name, assess the quality, and that's something our team obviously does. And then two, I focus personally on the income. They say that people who focus on the income their portfolio is generating during times like this, they have the best psychological approach to that time, because your income is kicking off, I'm sorry, your portfolio is kicking off income, various yields, of course, across the different risk profiles out there. However, every portfolio is kicking off income. And if you focus on that and the reinvestment of that income, it gets you through to the other side. So obviously there are some safeguards in place across models. And if you could talk to your advisor about that, where some risk has been reduced throughout a few of the holdings. But aside from that, those are the two things I think about: the quality and the easy. But depending on your age and your goals, if you're acquiring assets, it could be a good thing. Obviously, we did the dollar cost averaging example a couple weeks ago. But if you are more exposed to drawdowns hurting a retirement scenario, then of course that's a different consideration. That's all I've got, Mike, but we did survive.
Well, and I'll just throw out too that you'll see a lot of communications from Ankerstar Wealth I mean, you've hopefully have seen them over the past couple weeks. As when things are just going up steadily, it's not really that much news, just some reminders. But when we're seeing tariffs, and call this geopolitical crisis, because that's kind of what it is, expect frequent updates from us, whether that's a video or an email from your advisor or whatever. But we would rather err on the side of over communication with you. So, if you have concerns, call into your advisor, email back, whatever. We definitely here for you. So, with that, I hope everybody has a fantastic weekend, and we'll talk to you, I'm sure, on Monday. Bye.